Hi, this is Scott Martindale with Sabrient Systems with this week's Sectorcast. Last week, I talked about the impressive strength in the Dow Jones Industrial Transportation Average, but this week it was hit by investors' renewed worries about the global economic growth and financial stability, not to mention all the saber-rattling and bellicose rhetoric out of North Korea. Some end-of-quarter institutional buying last week with new money probably got quickly liquidated this week. It's understandable for investors to be skittish when the S&P 500 just set a new time high but hadn't yet confirmed the breakout. And then you throw in some disappointing news to start the quarter, and that new money jumping on the bandwagon usually becomes hot money when the breakout fails. Not surprisingly, the higher beta small caps have struggled the most lately. And among the 10 U.S. Business sectors, basic materials and energy have led to the downside this week, while healthcare has held up the best. Healthcare now stands alone as the leading sector in year-to-date performance, while materials has fallen so hard that it unseated telecom as the worst performing sector. The S&P 500 set a new time closing high of 1570 on Tuesday, but it failed to break the all-time intraday high of 1576. I think it got to 1573. It remains within a sideways channel between 1530 and about 1570. As long as the central banks, led by the Federal Reserve, keep the liquidity spigots open, and as they intend to do, equities remain the primary beneficiary of their money, particularly given the lack of appealing alternatives. We might get that long-anticipated pullback that truly tests bullish conviction, but I would expect it to be followed by a strong resumption of the uptrend. Next week kicks off another corporate earnings season, so all eyes will be watching. Looking at Sabrient's fundamentals-based Sectorcast ETF rankings of the 10 U.S. sector iShares, technology, consumer goods, and financial are still the top three. Tech stocks their lack of performance lately has kept their forward valuations quite good, and that's the main reason why tech still stands at the top. Perhaps investors just don't believe the earnings expectations, but we'll get a better glimpse of that as earnings season progresses. Telecom stays in the cellar with poor scores in virtually every metric in the model, and it's joined in the bottom two by basic materials. As I said earlier, these two sectors have been the worst performers so far this year, and they're at the bottom of the rankings going forward. Overall, this week's rankings maintain that neutral tone that I noted last week, and might even be slightly defensive, with defensive sectors like consumer goods, healthcare, and utilities all in the top five. Looking at the bear scores in particular, healthcare really took a big jump in its score because it held up so well during that recent market weakness. Within technology and consumer goods, the top ranked sectors, the top stocks that I see and really noted this week include F5 Networks, SolarWinds, NVR, and Polaris Industries. These are top ranked in the Sabrient ratings algorithms. By the way, Sabrient's Baker's Dozen Top 13 stocks for 2013 is up a robust 10% through the close on Thursday since inception on January 11th, despite taking hits this week from top performers in transportation and energy like Air Lease Corp, Alaska Air Group, and Marathon Petroleum. Over that same time frame, the S&P 500 is only up about 6%. And I also want to mention that Sabrient will be introducing a fresh list of 20 earnings busters for Q2, so you can visit our website to learn more about that. Thanks for listening.